Hello friends, I hope you are all doing good. Welcome to this amazing video wherein we'll be discussing about the amendments which are applicable for your examination, upcoming examination, which is going to be held in December. So those who are writing your examination, CMA or CS students who are writing in December or in January, for them these amendments are applicable, and majorly this will be focused for whom, sir? This will be focused for CMA Intermediate students. Okay. Sir, are there a lot of amendments which we have to study for this examination? Answer is completely no. Now, whatever amendments were there for the previous examination, which is that June examination which happened for CMA students, that same amendments are applicable. There are not much changes in the law, but however, for upcoming exam, that is for June, for upcoming exam, which is what, sir? For June 25 and December 25, there are a lot of changes which has happened in the law. So if you are writing your examination in that particular attempt, then for you this is not that relevant. This amendment video is only relevant for those students who are writing their examination now in December 24. Okay, so any person other than that who is watching this video, you can ignore that video. If you are writing your examination in December 24, then only this is applicable to you. Any person watching this video other than those who are writing their examination in December 24, this is not applicable for you guys. Okay, so this is one important point which I had to make it very clear before I start the discussion on the amendments. Now, so amendments are there under GST law as well as income tax law. We have, so your question paper, as you all know, that question paper contains 50 marks of indirect taxes, and your question paper will contain 50 marks of direct taxes. Now, if you ask me, where are the major amendments which are there? The major amendments are there under income tax law. GST law, the amendments which are there is not with respect to change in law. I mean, the law has not changed, only some clarifications they have issued. Okay, only clarifications has been issued under GST. So there are few points which you would have studied during your classroom. So with respect to those points, some clarifications the lawmakers have issued. What are those clarifications? We are going to see under amendment under GST. But whereas under income tax law, no, there are few sections only which are completely changed. So there are a lot of important points which you have to understand under income tax law. The amendments under income tax law are more important when compared to amendment under GST law, because amendment under GST law are very simple to understand, very easy to understand. So now, without wasting a single second, let me straight away start my discussion with this beautiful amendment. We'll first start with GST and then we'll go with income tax law. Supply under GST, topic wise we'll take all the different chapters from section 7 till section 50. These are the different sections which are applicable for intermediate level, correct? So all these sections we will see the topic wise. Section 7 talks about supply under GST, 8 talks about composite and mixed supply, 9 talks about charge under GST. So section wise we are going to see all these amendments. Okay, now without wasting a single second, let me straight away start this discussion with you guys. Supply under GST. Now there is a schedule. Section 7 subsection 2 talks about negative list of supply or no supply. So please note, I am expecting that you all guys would have already studied the syllabus, and now this amendment is just for clarification purpose. Okay, whatever I have studied, now is there any changes in that? That is how this is going to help you. Okay, so I will be taking reference of different sections or different topic. I will be discussing about different topics that you'll understand only when you have already studied the syllabus. Now we have a section called as section 7 subsection 2. This talks about what, sir? It talks about negative list of supply or no supply. There are few activities which are neither treated as supply of goods nor treated as supply of services. So section 7 subsection 2 says two things. There are some activities notified by government. These activities notified by government will not be treated as supply, and there are few activities listed in schedule number 3. Totally there are 9 activities listed in schedule number 3. Now these 9 activities which is listed in schedule number 3, they will not be treated as supply, meaning even if all the conditions to specify a particular activity or a transaction to be treated as supply of goods or supply of services, even if all the conditions of supply are getting satisfied, I am not going to call this particular activity as supply. So schedule 3 gives list of totally 9 activities. So one of the activities which is there under schedule 3 is actionable claims except lottery, betting and gambling. So one of the item which was there in schedule number 3 is that actionable claims except lottery, betting and gambling. What is this point telling, sir? So if you're doing a transaction in actionable claim, and if the transaction is in what, sir? If you're doing a transaction in actionable claim, then it is not treated as supply of goods, nor it is treated as supply of services. Please note, as we all know, when we see the definition of goods under GST law, goods definition says what, sir? Goods means every kind of mobile property other than money and securities, but includes actionable claims. So as per the definition of goods, actionable claims are treated as goods. However, if you are doing any transaction in actionable claims, it will not be treated as supply of goods, nor it will be treated as supply of services. In simple words, if you are doing any transaction in actionable claims, it is not a supply at all. However, if that actionable claim in which you are doing transaction is a lottery or a betting activity or a gambling activity, then it will be treated as supply. Now, what they have done over here is, they have made a simple change wherein they have added few more items. So instead of naming it as actionable claims except lottery, betting and gambling, they have given list of few activities and they have renamed this entry as transaction in actionable claims except specified actionable claims. Except what, sir? Specified actionable claims. Sir, what are you trying to say, sir? See, there is something called as schedule number 3. In schedule number 3, there are different items which are not treated as supply. Now, one of the item is what, sir? Actionable claims except lottery, betting and gambling. Now, this entry which was there is now changed. What is changed in this, sir? This entry now, that entry is now read as actionable claims except specified actionable claims. Instead of directly telling it as lottery, betting and gambling, now they have told what, sir? If you are doing any transaction in actionable claims except specified actionable claims, it is not treated as supply. So if I do transaction in this specified actionable claims, is it treated as supply? Yes. Now they have given list of specified actionable claims. So if you are doing transaction in these specified actionable claims, then it will be treated as supply. It will be treated as what, sir? It will be treated as supply. Which are the specified actionable claims? It is betting activity, it is casinos, it is gambling, horse racing, lottery and online money games. So if you're doing a transaction in these 6 items, please note these 6 items are treated as actionable claims. Normally, whenever you do a transaction in actionable claims, it is not treated as supply. But if you do transaction in these 6 actionable claims, which 6 actionable claims? Betting, casino, gambling, horse race, lottery and online money games. Online money games, if you do transaction in these 6 actionable claims, then now it will be treated as supply. So this entry has been replaced. This entry which is there, no, that has been replaced from the words. This entry which we have, that has been replaced by the words specified actionable claims. So actionable claims except specified actionable claims will not be treated as supply of goods or services or both. Okay, so this is the amendment number 1, point number 1. So if I am doing a transaction in these items, is it a supply, sir? Answer is yes. Now, next amendment or a clarification, not an amendment, this is a clarification. So this is an amendment in an entry, correct? This is an amendment. Next point is just a clarification. Now, what is this clarification? I'll directly give an example for to you to make you understand this particular point. Now, when you go to movie halls, to watch cinema, okay, when you go to any movie hall to watch any movie, etc. Now, there are 2 possibilities. One person buys ticket, okay, then during the break time, during the interval time, he goes to different the stores which are there or restaurants which are there over there, and he eats food over there. He goes purchase popcorn, he goes and purchases pizza, he goes and purchases samosa, he goes and purchases sandwich, etc. So he has just bought the ticket. At the first place, what he has done, he has just bought the ticket, and then during the interval time, when if you feel hungry, if I feel hungry, I will go have something. Correct? This is one type of transaction. Wherein I buy only ticket when I enter the hall. When I enter the hall, I have bought only ticket. During interval, if I feel like eating something, I'll eat out of the different restaurants which are supplying food in that cinema hall. Second category of people are there, wherein what they will do is they will buy ticket and also food. At the time of buying ticket only, what will I do? I'll book my seat from where I want to watch the movie, and I'll also book the food which I want to have. I'll also book the popcorn, because many companies, if you see Book My Show, if I book food along with my movie tickets, they'll give me 20% off on food charges, etc. So in this case, what is happening in case number two? In case number two, I am purchasing two things for a single price. I am purchasing movie ticket also, as well as I am purchasing that food services also. I am also purchasing food items to eat in the movie hall. So there are two separate transactions, correct? Transaction number one, wherein I buy movie ticket, and then in restaurant, whenever I go to movie hall, interval time, if I feel like eating something, I eat. Transaction number two is at the time of booking the movie ticket only, I am buying also the food items, meaning whatever I want to have. Okay. Now, what lawmakers are telling? What lawmakers are telling? In this case, in case number one, see, there are two separate transactions. This is an independent supply and this is another independent supply. So there is this one transaction and this is one second transaction. In case number one, there are two separate transaction. Transaction number one is purchase of movie ticket, and transaction number two is eating food from the restaurants which are there in the cinema halls. So in this case, for movie ticket, you apply the GST rate of movie ticket, whatever GST rate is applicable for that, that is 18%. And for this restaurant, for the food item which you have bought, apply the GST rate of food items, which is 5%. However, when they both are supplied together, when what is supplied together, when tickets with food is supplied to you, then you will have to apply the provisions of section 8 and check whether it is a composite supply or mixed supply. Check whether it is a composite supply or mixed supply. If it is a composite supply, then the rate of principal supply should be applied, and if it is a mixed supply, then highest rate will be applicable on this transaction. So this is just one single clarification which they have given. So you should check whether it is a composite supply or mixed supply. If it is a composite supply, apply the rate of principal supply. If it is a mixed supply, apply the highest rate. So what is important over here? Whether that food joint, whether the ticket which you have booked, okay, whether the ticket which you have booked involves, whether the ticket which you have booked is only for watching movie or it is for watching movie and eating food over there. Now again, here there may be different categories. What are the different categories over here? Now the restaurant which is run in the cinema halls, that can either be owned by the cinema hall, or these restaurants can be owned by some third party. For example, I am going and watching a movie at PVR. So PVR may have its own restaurant from where it is supplying food, or it may have, say, it may have Domino's in that PVR. In that PVR, they may have Domino's, wherein Domino's is supplying food to me. So here, when PVR itself is having its own restaurant from where I'm buying popcorn, then it is owned by the cinema halls. When it is given to a third party, when PVR says, okay, hey Domino's, you can have your store over here, hey McDonald's, you can have your store over here, then it is owned by whom, sir? It is owned by third party. So when I purchase from a third party, no doubt at all, because there will be a separate transaction between purchase of movie ticket and purchase of pizza from Domino's. But many times what may happen is I purchase the movie ticket along with food items which will be supplied by PVR only. So in that case, we'll have to apply the provisions of section 8 to check whether the transaction is a composite supply or mixed supply. Now, one of the major amendments which has happened is in charge under GST law. One of the major amendment which has happened under GST law is where, sir? Under charge under GST law, and that too with respect to director related services. Now, what I'll do is I'll explain this with a beautiful example, and I'll make you prepare a very good chart for this particular transaction. Now, if you all remember, services given by director of company to the said company Services given by whom, sir? Director of a company to the said company is taxable under reverse charge. What is this point telling, sir? So if the director of the company is giving services to a company, then that services will be taxable under reverse charge. And one more point we have studied under schedule number 3, which says services by employee to employer in the course of employment. In what, sir? In course of employment. In the course of employment is not a supply. Correct? Services by employee to the employer in the course of employment is not a supply. So these two important points are there. One, so if any services are given by employees to their employer in the course of their employment, then it is not a supply. Second is what, sir? Services given by the director of the company to the company is taxable under reverse charge. Now, taking these 2 points as a base, I'll discuss this amendment which has happened. Now, please note, a director of the company can be of 2 types. There can be 2 types of director in a company. So when I talk about director, director can be of 2 types. One is called as employee director. Another one is called as non-employee director. Meaning what, sir? One person is a director of the company who is an employee of that company. For example, full-time director. Another type of director whom we have is a non-employee director. For example, he can be a independent director. An independent director is not employee of the company. So now what happens if services are given, okay, services are given by employee director to the company. So who is a company? Company will be the employer for him. So services given by employee director to the company as an employee. Okay, in which capacity? In the capacity of employee. Okay, if employee director is giving services to whom? The company in the capacity of employee, it is not a supply. Correct? It is not a supply. It is not a supply. Why? Because services given by employee to the employer in the course of employment is not a supply. However, if the same employee director is giving services to the company in his personal capacity, meaning what? If you remember, I have taken example during the class time only. I have taken examples for all this point. If an employee is giving services to the company in his personal capacity, I gave an example wherein one of the person was my employee and he gave the services to me as an employee. Second case, he is also a cost accountant. He is giving services to me of filing my cost audit report. Correct? This second services which is given by him is not in the course of employment. It is in his personal capacity. So if any services are given by employee director, to the company in his personal capacity, that is taxable. It is taxable. And sir, is it taxable under reverse charge? No, this will be taxable under forward charge. This will be taxable and this will be taxable under what, sir? Forward charge. Why? Because it is given in his personal capacity. Similarly, a non-employee director also can give services in 2 capacities. One, services as a director of the company. Second, services in his personal capacity. Okay. So whatever services he is going to give as a director of a company, it is taxable. It will be taxable, and it is taxable under what basis, sir? It is taxable under reverse charge mechanism. Okay. So whatever services are given by non-employee director to the company as a director of the company is taxable and taxable under reverse charge. However, any services given by non-employee director to the company in his personal capacity is again taxable, and it is taxable under forward charge. So can I say the crux of this particular discussion which we had, The crux of this discussion which we had is, in simple words, if employee director is giving services to the company in the capacity of employee, it is not taxable because it is not a supply. However, if a non-employee director is giving services to the company as a director of the company, then it will be taxable and taxable under reverse charge. Who has to pay the taxes? Company will have to pay the taxes under reverse charge. Now please note, whether it is an employee director or a non-employee director, whether you are an employee director or you are a non-employee director, whoever you are, you give the services to the company in your personal capacity, it will always be taxable. Whether you are an employee or non-employee does not matter. If you are giving the services to the company in your personal capacity, then it will always be taxable, and it will be taxable under what basis, sir? Forward charge mechanism. It will be taxable under forward charge mechanism. A, is this point clear to you all? I hope this point is clear to you all. So now only this one extra point they have added. So normally whatever services are given by services supplied by director of a company or a body corporate to the company or the body corporate in his private capacity or in his personal capacity is not taxable under reverse charge. So services given by the director in his private capacity or in his personal capacity is not taxable under reverse charge. Hey, they are not telling that it is not taxable at all. They are telling that it is not taxable under reverse charge. That means it is taxable under forward charge. So entry number 6 of notification number 13/2017 provides that tax on services supplied by director of the company to the body corporate shall be paid by the body corporate under reverse charge. It is hereby clarified that the services supplied by the director of the company or a body corporate to the body corporate in his capacity, in his private or personal capacity, by way of renting of immobile property, example they have given, by way of renting of immobile property to the company or a body corporate is not taxable under reverse charge. They are not telling it is not taxable at all. They are telling it is not taxable under reverse charge. Only those services which are supplied by the director of the company or a body corporate which are supplied by him in the capacity of the director, will be taxable under reverse charge. Okay, so whatever services are supplied in the capacity of director will be taxable under reverse charge. If you are supplying anything in your personal capacity, it will not be taxable under reverse charge. Next. Now, services provided by government. So there was one entry which talks about services provided by government. So services provided by central government, state government, union territory or local authority to a business entity was taxable under reverse charge, and the tax was supposed to be paid by business entity. However, there were some exclusions in this point. There were some exclusions. What were excluded? In case of following items, no, it is not taxable under reverse charge. In which cases, sir? If renting of immobile property services are provided by government. Similarly, if services are given by Department of Post, if services are in relation to aircraft and vessel inside or outside the port or persons of port or airport, and if the services is related to transportation of goods or transportation of services. Here they have added one more point. In simple words, they have added one more point in this particular category, which is services given by Ministry of Railway or services given by Indian Railway. So Indian Railway is giving services to any person. Indian Railway is giving services to any person. It will be taxable under forward charge mechanism. It will be taxable under forward charge mechanism. See, please note all these items which you are seeing over here. All these items, these are the items normally services given by government, that is central government, state government, unitary local authority to a business entity is taxable under reverse charge. However, if these services are given by the government, then it is not taxable under reverse charge. It is taxable under what charge, sir? It is taxable under forward charge. It is taxable under forward charge. Here they have added one more entry. What is that one more entry? Services given by Indian Railway. So if any services are given by whom, sir? If any services are given by Indian Railway to a business entity, non-business entity, it does not matter. It is taxable under forward charge. Similarly, there is one more entry called as entry number 5A. What is this point talking about? Services supplied by central government excluding the Ministry of Railway, that is nothing but Indian Railway. Services supplied by state government, union territory, local authority by way of renting of immobile property to a registered person. See, normally there is entry called as entry number 5A, which told services given by government, which is nothing but central government, state government, union territory or local authority to whom? to a registered person. What type of services? Renting of immovable property services. Renting of immovable property services given by central government, state government, unitary local authority to a registered person. That registered person has to pay the tax under reverse charge. He has to pay the tax under reverse charge. However, if central government is giving services, and in central government, who is giving services? Indian Railway. If Indian Railway is giving services of renting of immovable property to a registered person, then RCM shall not apply. What shall apply? Forward charge only shall apply. So this is one amendment which is there. Next, there is a topic called as place of supply. Beautiful topic, very simple, easy topic. Now they have added one new section in this place of supply for goods. Now, if you remember, place of supply topic, basically, normally in your entire GST law, whatever you are studying is from CGST Act. It is from which act? CGST Act. But there is only one single topic called as place of supply. That one single topic called as place of supply is a topic which you study from IGST Act. So IGST Act 2017 gives the details with respect to interstate supply, and the provisions of place of supply is given under IGST Act. So we have seen in this section 7 which gives the meaning of interstate supply, section 8 which gives the meaning of intrastate supply, section 9 which gives the meaning whenever there is a supply made to a territorial, whenever there is a supply which is made to where the location of supply and the place of supply is in territorial waters, etc. Apart from that, section 10 and section 11 talks about determination of place of supply in case of goods, and section 12 and 13 talks about determination of place of supply in case of services. Correct? So this is what section 10, 11 and 12 and 13 talks all about. Now here we have a section called as section 10 subsection 1, which talks about what, sir? Determination of place of supply of goods. Determination of place of supply of goods where the location of the supplier and the location of recipient both is in India. Both is in India. Now what they have done is they have added a new entry in this section. They have added one section. So basically this particular section 10 subsection 1 clause, section 10 subsection 1 had totally 5 items. Clause A, clause B, clause C, clause D and clause E. There were totally 5 items which are covered under section 10 subsection 1. Now they have added one more item over here called as section 10 subsection 1 clause CA. New item has been added. Section 10 subsection 1 clause CA talks about place of supply. It talks about what, sir? It talks about place of supply of goods where supply is to an unregistered person. Where supply is to an unregistered person. Now what is this point telling, sir? Whenever you make a supply to an unregistered person, there are two possibilities. I'll give example. Let me just write the provision first. Whenever you make a supply to an unregistered person, there are two possibilities. Address of that unregistered person is available with you, or address of that unregistered person is not available with you. Whenever you make a supply to whom? Whenever you make a supply to an unregistered person, there are two possibilities. What are these two possibilities? Address of that unregistered person is available with you. Address of that unregistered person is not available with you. Now, if the address of that unregistered person is available, then the place of supply will be that address. Whatever address is available with you. If address is not available, then the place of supply will be location of supplier. Location of supplier. Let me just give a simple example. Let me just give one simple example for you to make you understand this beautiful provision. This is Mr. Dilip, owner of Priya Sarees. Now what happens? You come to Priya Sarees. Are you a registered person? Are you a registered person? Registered person means what, sir? Are you registered under GST law? No, sir, you are not registered under GST law. So you come to Priya Sarees, you purchase a saree. You tell me, sir, oh sir, I want this saree, sir. I want this saree. Where is Priya Sarees located? Priya Sarees is located in Chennai. Where is Priya Sarees located, sir? Priya Sarees is located in Chennai, Tamil Nadu. Now you come to Priya Sarees. You come to Priya Sarees. When you come to Priya Sarees, let us say you are from Hyderabad. You're from Hyderabad. You come to Priya Sarees. You tell me, sir, I want this saree, sir. I want this saree. I said, okay, take this saree. This saree is worth rupees 10,000. You take this saree from me. You say, sir, I want this saree, and this I say that this saree is worth how much? This saree is worth rupees 10,000. I give this saree to you worth rupees 10,000. Now, please understand this carefully. I give this saree to you worth rupees 10,000. Now, question which arises over here is, should it be treated as interstate supply or intrastate supply? Meaning, should I charge IGST or should I charge CGST, HGST for this transaction? Because please note, it is a supply of goods. You have come to Priya Sarees, which is located in Chennai. You have come to Priya Sarees, which is located in Chennai, Nungambakam area. Okay, Chennai Nungambakam Priya Sarees is there. You have come to Priya Sarees. You told me, sir, I want this saree. I took that saree. I gave that saree to you. You gave me 10,000 rupees. You gave me how much? You gave me 10,000 rupees. You gave me 10,000 rupees. I have to collect GST on the 10,000 rupees. Now I have to collect GST. Let us say rate of GST is 10%. So now 1,000 rupees I have to collect from you. Now, whether this 1,000 rupees which I should collect should be IGST of 1,000 rupees or CGST 500 and SGST 500. That is the question. That is the question. Because you are an unregistered person. Because you are an unregistered person. Now for which they have added a section called a section 10, subsection 1, clause CA, which says if you have that address of unregistered person, if I know where you are coming from, if you tell me, sir, I have come from Hyderabad, please give me an invoice in my name and write my location as Hyderabad. If the address of that unregistered person is recorded on the invoice, then the place of supply will be that address which is recorded on the invoice. Now, if I write your address as, yes, say your name is Mr. Rajnikant. Say Mr. Rajni has come from Hyderabad. So now, what lawmakers are telling? Priya Sarees is in Chennai. Then the supplier is in Chennai. The recipient is in Hyderabad. Therefore, place of supply will be what, sir? Hyderabad. What will be the place of supply? It will be Hyderabad. Though you have physically come to Priya Sarees, though I have given the saree to you at Priya Sarees only. Though I have given the saree to you at which location? At Priya Sarees only. In this case, for this transaction, what will be the place of supply? The place of supply will be the address which is mentioned by me on the invoice. Sir, what if you don't have his address? You have come to Priya Sarees. You have come to Priya Sarees. You like the saree. You took that saree. I told it is 10,000 rupees. Now you did not tell me from where you are. And when you did not tell me, when you didn't tell me from which location you are from, then what am I going to assume, sir? What am I going to assume? Will I assume that you are from Mars? Will I assume that you are from Pakistan? Will I assume that you have come from Australia? No. Correct? Not correct. So when you are not telling from which location you are, then what am I going to assume? I am going to assume that you are from Chennai only. You are from Tamil Nadu only. Therefore, I will levy what, sir? CGST and SGST. So what are they telling? Check whenever there is a supply which is made to an unregistered person, check whether the address is available. In simple words, check whether the address has been recorded. Address of that unregistered person has been recorded in the invoice, or address is not recorded in the invoice. If address is recorded, then whatever address you have recorded in the invoice, that will be taken as place of supply. And if address is not recorded, then my location, whose location, supplier's location only will be taken as place of supply. So this is a new amendment. Where the supply of goods is made to a person other than registered person, the place of supply shall be the location as per the address recorded in the invoice for the said supply, and the place of supply will be location of supplier where the address is not recorded on the invoice. In simple words, this is the provision. This is a new section which is added, section 10, subsection 1, clause CA. Clause what, sir? CA. Now, this is a simple amendment, not that important or not. I mean, from exam point of view, of course, it is important, but it's a very simple amendment. Next, there is a topic called as exemptions. In exemptions, they have removed few items, they have added few items. What have they removed, sir? Now, satellite launch service. So, satellite launch service was exempt before only if it was given by ISRO or Antrix Corporation Limited or New Space India Limited. But now, they have removed this word ISRO, Antrix Corporation Limited or New Space India Limited. Meaning what, sir? any person giving this satellite launch services, are any person giving this satellite launch services, any person giving this satellite launch services will be exempt. Okay, so now any person giving satellite launch services, their services will not be taxable. Now there is one entry called as entry number 6, which talks about government related services. Normally any services given by central government, state government, union territory or local authority, excluding following services, are exempt. Meaning any type of services given by central government, state government, union territory, local authority is exempt, excluding following services. Excluding which services? Services given by Department of Post, services in relation to aircraft and vessel, services with respect to transportation of goods and transportation of passengers when it is given to a business entity, and any services given to a business entity. Normally in these items, no, point number A, B and C are taxable under reverse charge, and point number D is taxable under forward charge. Sorry, ulta I told ulta. This is point number D. Normally what happens, sir, in case of point number A, B and C, it is taxable under forward charge, and point number D is taxable under reverse charge. Now here they have added one more entry called as services given by Ministry of Railways or Indian Railway. Services given by Indian Railway is also taxable. It is taxable under forward charge, meaning this is the same amendment which is there under reverse charge provision. Just now we saw about reverse charge provision. Just now here we saw reverse charge item provision, so they added one item over here. Same to same line they have added in RCM also. Same to same item they have added in RCM also. Then they have added a new exemption entry number 3B. What is this entry number 3B? If any services are given to governmental authority. If what services? Any type of services, following services. If following services are given to whom, sir? Governmental authority, then it will be exempt. Which services? Services of water supply, services of public health, services of sanitization, services of solid waste management, and slum improvement or upgradation. If you give these services, say for example, I am giving service, I have a sanitization company wherein I am giving its services to governmental authority. I have a sanitization company wherein I have a solid waste management services wherein I give services to whom, sir? Governmental authority. So my services will be exempt. My services will be exempt. I don't have to collect any GST on my services. Then one small item in value of supply topic. Basically they have added this under value of supply topic, but it is an amendment from time of supply topic. It is an amendment from which topic, sir? Time of supply topic. So if you remember, when we discussed about time of supply, if you remember, we discussed a notification called as notification number 66/2017. Now what is this notification number 66/2017 telling? Notification number 66/2017 says, notification number 66/2017 says, if you receive any money before making the supply, the date of receipt of that money will not be taken as time of supply. In simple words, date of payment is not treated as time of supply. Okay. Now they say this notification is applicable for all this. Normally when we studied this notification, we understood that this notification is applicable only for supply of goods. Only in case of supply of goods, wherever provisions of section 12 is applicable, section 12 of CGST Act is applicable, only for that this notification number 66/2017 is applicable. However, one small addition they have made, change they have made in this notification. They have told this notification is applicable for in case of all supply of goods except, this notification is applicable in case of supply of goods except which goods, sir? Except specified actionable claims. Except what, sir? Specified actionable claims. Do you remember our first exemption entry which we discussed, specified actionable claims? What did we see under specified actionable claims? We saw that there are some actionable claims, there are some specified actionable claims, there are some, totally how many items are there? 6 items: lottery, betting, gambling, casino, online money games, and which, sir? Lottery, betting, gambling, casino, online money games, and horse racing. For these 6 items, this notification is not applicable. What is this amendment or clarification telling, sir? Notification number 66/2017 issued to exempt registered person for requirement of payment of taxes at the time of receipt of advances in case of supply of goods, and provides for payment of taxes as per section 12 subsection 2A with effect from 1st of October 2023. The notification shall exclude registered person making supply of specified actionable claims. Meaning what, sir? So if you are making supply of specified actionable claims, for you this notification 66/2017 is not applicable. Next amendment is with respect to a beautiful topic called as registration. What is this amendment talking all about, sir? This amendment says registration. Now there are different amendments over here, but these are all procedural related amendments, meaning these are all important from practical aspects of your life. Now section 24 talks about what's a compulsory registration. In your registration topic, there is a section called as section 24 of CGST Act, which talks about compulsory registration. So they have given list of different people who have to take registration under GST law compulsorily. One of the person who is specified over here is online money gaming, a person who is involved in the business. Mandatory registration for every person who is supplying online money gaming from a place outside India to a person in India. So if you supply online money gaming services. So if you are in the business of online money gaming, and if you are located from and if you are giving the services from outside India, then you should compulsory take a registration in India. Mandatory registration for every person supplying online money gaming from place outside India to a person in India. So if you are a company from outside India who has any app wherein people in India are using your app and playing games, etc., so then you should compulsorily come to India and take registration under GST law. Requirement of presence of applicant for physical verification is done away with. Beautiful point. It is done away with. What do you mean by this, sir? See, normally before, what used to happen, before under GST law, if I had to take registration under GST law, then there are two options. I do Aadhaar authentication or I don't do Aadhaar authentication. So if I do Aadhaar authentication, or Aadhaar authentication is, this procedure we have to follow now also. Aadhaar authentication was one process, or I don't do Aadhaar authentication. If I do Aadhaar authentication, then that means what, sir? I will have to verify my Aadhaar number and OTP will be sent, and accordingly my registration will be approved. Whereas if I don't do Aadhaar authentication, then physical verification of my store used to happen. What used to happen, sir? Physical verification means what, sir? The GST department, the officer used to come to my location and he used to physically verify whether I'm present at that location or not, and accordingly he used to give registration. Now, what used to happen at the time of physical verification? No, officer used to reject my application. What used to happen, sir? Officer used to reject the application whenever physical verification was happening. The GST officer used to reject the application. Sir, why, sir, he was rejecting the application? Because many times it used to happen that the officer would have come to my place for physical verification, but I am not available. I, being owner of my business, I'm not available. Sir, but why were you not available? Maybe because I had I'm outside for supplying goods to some of my customer. I'm outside for purchasing the goods, etc. So normally the owner of the business was not available, because the owner of the business was not available at the time of physical verification. This officer used to reject the application. This is not fair. No, see, please note, I have my staff members, there is my business premises which is located at one place, I have my staff members, etc. But still, when actual physical verification was happening, because the owner was not there, they were rejecting the application. Now just imagine about ArivuPro. Just imagine about our institute. We are located at Chennai. Okay, we are located at Chennai, and we have applied for GST registration for Chennai unit. Now all our directors, all our owners are sitting in Bangalore. Now officer comes for physical verification. Now when they come for physical verification over here, they'll tell, oh no, this all the staff members are there at the Chennai unit. There are staff members at Chennai unit. There are students who are coming and studying in the Chennai unit. But still, they say, oh, owner is not present. Okay, because owner is not present, we will reject the application. This is not right. No. See, the directors or the owners may have to visit different locations for marketing purpose, or for purchasing different goods and services, for supplying goods or services, etc. So in such cases, physical presence of owner may not be possible many times. Correct? So lawmakers now said that owner need not be present at the time of physical verification. So they have made these changes and they have told physical verification can be done even without presence of owner. Now, one more small amendment they have done. Normally, what used to happen was an applicant, if I am applying for registration, no, then I had to do my bank account verification. Now, see, GST law was a new law, so there were a lot of loopholes which they are day in day out correcting all those loopholes. Normally, what used to happen when I was applying for registration, when I am applying for registration, I had to also give my bank account details. Meaning, say I am applying for registration for my company called as Priya Sarees. At the time of making an application for registration under GST law for Priya Sarees, I also had to attach bank statement of Priya Sarees, or I have to attach a cancel check of Priya Sarees giving my bank account details to the government. What problem is to happen is, if I go to a bank, the bank person, to open a bank account, the basic document required was the GST registration certificate. So if I want to open a bank account, then I wanted GST registration certificate. So without GST registration certificate, I could not open a bank account. And here I could not get the GST registration without my bank account. So there was one big problem which was happening. Meaning, one side I cannot open a bank account because I don't have a registration certificate. Similarly, I cannot take registration under GST law because I don't have my bank account. So I was neither getting GST registration nor I was getting bank account, and nor the bank account was getting opened. So what lawmakers did? Lawmakers understood this hardship. Obviously, this is a problem. This is a problem in the law. What lawmakers did? Okay. Once you take a registration, at the time of making an application for registration, I will not ask you to submit the bank account details. Whenever you are taking the registration, no, that time you don't have to upload bank account details. The details of bank account is required to be furnished by the applicant. When should he furnish, sir? Okay, at the time of registration, he does not have to submit. But when should he submit? He should submit it within 30 days from the date of grant of registration, or before filing the GST return, whichever is earlier. So before filing the first GST return, that is GSTR1, or within 30 days from the date of getting registration, whichever is earlier, you should upload the bank account details. So before making an application only, I should upload the bank account details. But now they have changed it. They have changed the law. They have told you take the registration. I will give the registration to you even if you don't give the bank account details. But once you get the registration within 30 days or within the time of filing your GST return, whichever is earlier, you should give me your bank account details. Now, next, system-based suspension of registration in case of failure to furnish details of valid bank account. Okay. So what is this point telling, sir? What is the next point telling? Now, normally, this point number 3 told us that I should give bank account details. Now, what if I don't give bank account details? Your application. So, if you don't give bank account details within 30 days or before filing the first return, then your application, your registration will be suspended. Your registration, what, sir? Your registration will be suspended. However, once you upload the details, automatically the suspension shall be revoked. Meaning, within the time limit, if you don't upload bank account details, your registration will no more be active. But however, once you make an application, once you upload those details, your registration will become active automatically. You don't have to do anything. Then, extension of time limit for revocation. Section 30 talks about revocation of cancellation. So, Section 29 gives the details, different cases where registration can be cancelled by the GST officer. Which section? Section 29 gives the list of different cases or scenarios where the registration can be cancelled by whom, sir? Proper officer, which is nothing but GST officer can cancel the registration. Now, if the GST officer has cancelled the registration, I have the power. The registered person has the power to apply for revocation, and this power to apply for revocation is given under which section? This power to apply for revocation is given under section 30. This power is given under which section? This is given under section 30. Now, before the time limit for applying for revocation was within 30 days. I had to apply for revocation within 30 days. Now, this 30 days has been replaced by how many days, sir? 90 days. Now, I can apply for revocation within 90 days, and which can be further extended to a period up to 180 days. So I can make an application for revocation. So if the GST officer has cancelled my registration, I can apply for revocation. Within how many days can I apply for revocation, sir? Within 30 days I can apply for within 90 days I can apply for revocation, and this can be extended up to 180 days. Unregistered person with aggregate turnover up to threshold limit permitted to supply goods through e-commerce operator. Special procedure to be followed by e-commerce operator in case of supply of goods through them by unregistered person. Now, this is a beautiful point, a new point. What used to happen was many small businessmen, they were not allowed to supply. See, section 24 is a section which talks about compulsory registration. Section 24 said what, sir? Section 24 said if you want to if you want to supply through an e-commerce operator, if I want to supply goods through whom? Through an e-commerce operator, I should take registration under GST law compulsorily. Compulsorily, I have to take registration. So if there is Flipkart, okay, so there is Priya Sarees, and there is a customer. So customer will place an order to Flipkart. Flipkart will give the information to me, and I am going to supply those goods to customer. So if I had to supply, if I wanted to supply my goods, through Flipkart, then I, being Priya Sarees, should take registration under GST law compulsorily. Who told? Section 24 told. Okay, section 24 told that a person who is supplying goods through or services through an e-commerce operator should take registration under GST law compulsorily. But many people who were small businessmen had to apply for registration even if their turnover was very less. Their turnover was only 2-3 lakh rupees, 5 lakh rupees, 10 lakh rupees. They had to take registration because of section 24. Now that compulsory requirement of taking registration has been removed. Now what are they telling, sir? What are they telling? Even if you are an unregistered person who is supplying through an e-commerce operator, you can supply through an e-commerce operator without taking registration. But there are some procedure which you have to follow. An unregistered person with aggregate turnover up to the threshold limit of supply of goods through an e-commerce operator, special procedures has to be followed by such e-commerce operator in respect of supply of goods through them by such unregistered person. So an unregistered person need not take compulsory registration, but however the e-commerce operator, now what they have done, practical life, what happens, I'll tell you. In practical life, this Flipkart is there. No, they should take the PAN of this supplier. They should take the PAN and they should give the they are required to do some deductions based on that PAN. They are required to take the recordings of those PAN from that person. Instead of GST number, PAN is required. Next, there is a chapter called as tax invoice, debit note and credit note. Here, one major amendment is with respect to this threshold limit for e-invoicing. Threshold limit for e-invoicing is now how much, sir? 5 crore rupees. So if you, for you, e-invoicing provision will be applicable if your turnover is up to how much? 5 crores. If your turnover is up to 5 crore rupees, then for you, what will be applicable? E-invoicing provision will be applicable. If your turnover is up to 5 crore rupees, starting from financial year 17-18 till financial year 22-23, in any of these years, if your aggregate turnover is up to 5 crore rupees, then for you e-invoicing will be applicable for compulsory basis. Then e-invoicing is not applicable to few people, correct? See, if you remember, we saw that e-invoicing is not applicable for CPICs. E-invoicing is not applicable for 5 people, which is CPICs. Who are the CPICs? Cinema halls. See, normally who is required to follow invoicing? Any person whose aggregate turnover is more than 5 crore rupees, starting from 17-18 to 22-23, in any of the year. In any of the year, if your aggregate turnover is more than 5 crore rupees, then for you invoicing provision is applicable. However, invoicing provision is not applicable if you are cinema halls, if you are passenger transport service provider, if you are in the business of passenger transport, if you are I for what, sir? Insurance company, or if you are a banking company, if you are an insurance company or a banking company, if you are a goods transport agency, and if you are S for SEZ units. So for these people, for these 5 people, what is not applicable? E-invoicing provision is not applicable. Now what they have done, they have added one more person over here. They have added one more person. Who is that one more person? Government departments government agencies, local authorities. Okay, so what is this point telling? Government departments, public sector undertaking registered only for the purpose of deducting taxes under section 51, who are registered for the purpose of deducting taxes under section 51 of CGST Act need not take invoicing, need not do the provisions of invoicing. They need not follow invoicing provision. So now this memory technique is changed from CPICs to government CPICs. Now it is changed to what's it? Government CPICs. So one more people added over here is government department, government agencies or local authorities who have taken registration solely for the purpose of deducting taxes under section 51 did not follow invoicing provision. Then payment of tax chapter. Payment of tax chapter clarification. This is okay. Clarification on charge of interest under section 50 in case of wrong availment of input tax credit and reversal thereof. So if you have wrongly, I'll just read this point once and they'll explain you. Whether in case of wrong availment of input tax IGST credit by a registered person and reversal thereof for calculation of interest under 88B, whether the balance of ITC in electronic credit ledger under IGST only needs to be considered, or total ITC available under CGST, SGST, IGST should be considered, since the amount of ITC available in electronic credit ledger under any of the heads of IGST, CGST, SGST can be utilized for making the payment of IGST. It is the total ITC available in electronic credit ledger under IGST, CGST and SGST taken together that should be considered for calculation of interest under Rule 88B for determination of whether the balance in electronic ledger falls below the wrongly availed input tax credit to the extent of balanced ... Now, what is this point telling? I'll just give an example. For example, GST officer under Rule 88B talks about what, sir? Different scenarios when the officer can block your credit. Okay, so if you have wrongly taken input tax credit, then the officer has all the power to block your input tax credit. Okay, say for example, now what is this clarification? This clarification is only with respect to the point of IGST. Now, I have wrongly claimed input tax credit of IGST. Okay, I have wrongly claimed input tax credit of IGST. Say, let us say I have excess claimed IGST credit by rupees 50,000. Meaning, what has happened in my books as per my GSTR 2A 2B, I was supposed to claim a credit of 50,000. But how much credit I have claimed? Actual I have claimed is 1 lakh rupees. So can I say I have claimed excess of 50,000, or else I'll do one thing. I was supposed to claim an input tax credit of 40,000 under IGST, but have claimed an input tax credit of 1 lakh. So can I say I have excess claimed 60,000 credit? I have excess claimed credit of 60,000, and apart from that, CGST and SGST credit was also there, worth rupees 25,000 and 25,000. Now here what has happened and how much have I actually claimed? 25,000. So there is no excess claim. There is only excess claim of IGST. There is an excess claim of IGST. Now, when department is going to issue a notice to me, obviously here what is going to happen? Department is going to issue a notice to me telling, Dilip, you have claimed excess ITC of 60,000 rupees. Therefore, you will have to pay interest at the rate of 18% for this excess claim. Now, when interest is charged, should interest be charged on 60,000 rupees, or should interest be charged on 60,000 minus 25,000 minus 25,000? Because this excess, can I adjust with these people? And should I pay interest only on 10,000 rupees? That is the question. What do you feel? Should it be charged on 60,000 or it should be charged on 10,000? Now please note. Sir, it should be charged on what amount, sir? It should be charged on 10,000. Sir, why, sir? Because lawmaker says, see, IGST credit, see, whenever you have IGST payment, no, Whenever you have IGST payment, you can make that IGST payment through utilization of CGST as well as SGST. Correct? So you use CGST and SGST. What is the difference amount? 10,000 rupees. 10,000 now you will have to pay back to the government in cash, and on the 10,000 rupees only pay interest. On the 10,000 rupees only you have to pay interest. Last topic for our discussion is returns topic under GST law. This is the last topic. So almost 1 hour we have taken to do the amendment discussion of GST. Now maybe one hour discussion we'll be having for direct taxes also. Additional cases prescribed where registered person is debarred from furnishing details in GSTR1. Now, so there are different scenarios wherein a person will not be allowed to file his GSTR1 GST return, or he will not be able to use this invoice furnishing facilities. So they have added one extra ground over here. If a registered person to whom the intimation has been sent under Rule 8DD shall not be allowed to file his GSTR1. Similarly, a registered person shall not be allowed to file his GSTR1 or invoice furnishing facility if he has not furnished the bank account details as mentioned in Rule number 10. So two extra points have been added. One, if you are not following Rule 10DD, Rule 88D, and if you are not following Rule 10A, wherein you are not uploaded the bank account details. So if you don't do these two things, then also you will not be allowed to file the GST returns. Manner of dealing with the difference in input tax credit in auto generated statement containing the details of input tax credit availed in the return prescribed. Now they have introduced a new mechanism for taking of input tax credit, wherein you can take based on whatever is available in GSTR 2A, only that input tax credit can be availed by you. Now they have given the mechanism for that, where the amount of ITC availed by a registered person in return for the tax period furnished by him in GSTR 3B exceeds the input tax credit of such person in accordance with the auto generated statement of GSTR 2B in respect of the said period by specified amount or percentage, the registered person shall be given an intimation in the prescribed form electronically on the common portal, and a copy of intimation will be sent to him through an email. The said intimation shall highlight the said difference and direct him to pay an amount equal to excess input tax credit along with interest, and explain the reasons for such difference. Such registered person shall, upon receipt of such intimation, either pay an amount equal to the difference along with interest, or furnish a reply electronically within 7 days. Now what is this point telling? Rule 88B has been added. So normally we take input tax credit by filing a return called as 3B, and this whatever ITC I take in 3B, no, this should be as per my GSTR 2B. Now if I take input tax credit more than what is there in GSTR 2B, while filing my GSTR 3B, if I take more input tax rate, lawmaker says we will send a notice to you, we will send an intimation to you that telling there is a difference. Now you have two options: either tell me what is why the difference is there, you tell me what is the reason for the difference, or case number two, you reverse that amount, whatever extra you have claimed, you please pay back to me along with interest. Either give me the reason for difference, or you please tell me, or you please pay back that money. That is what is given in rule number 88B. This is newly introduced. We'll discuss income tax after short break. Okay, one short break I'll take and discuss income tax video discussion. So let us continue the discussion, and now we'll be starting the amendments which have happened under income tax law. Very beautiful amendments, very important amendments are there under income tax law. Now the major amendment which is there is the first amendment which we are seeing. This is the most important amendment for your examination, and please note, this discussion which we are going to do under income tax law is applicable only for this present examination, which is those who are writing their examination in December 24. If you are writing your examination after December 24, whatever discussion we are going to do is not applicable to you. It is completely changed. It is completely changed. This particular section is also changed, and all the other provisions which you are going to see, majorly they are all changed. Okay, so whatever discussion we are going to do now is applicable to whom, sir? Those who are writing CMA students who are writing examination in December 2024. Okay, now amendment in respect to tax rate. So there is a section called as section 115 what, sir? BAC. There is a section called as section 115 BAC. Section 115 BAC talks about what, sir? It talks about default tax regime. It talks about what, sir? It talks about default tax regime, meaning what is the tax which you have to pay normally? What is the tax which you have to pay normally? Basically, if you remember, the first topic which we discussed in our classroom is tax rates, wherein we studied that up to 2.5 lakhs no tax, 2.5 to 5%, 5 to 10, 20%, more than 10, 30%. That is the normal tax rate which we studied. That is also called as optional regime. But we are seeing over here what, sir? Default tax regime 115 BSc. Now there is a complete change in this section 115 BSc. What is the change? What is that amendment we are going to see? And I am also going to take up a small question to make you understand about the difference between normal provision and 115 BSc. Okay. So to explain you this concept, I have done a comparative analysis of what happens under normal provision or under optional regime and what happens under section 115 BSc. Let me straight away start the discussion. 115 BAC, default tax regime under section 115 BAC of Income Tax Act 1961. This section is applicable to an individual, HUF, AOP, BOI, artificial judicial person. Alright, to whom is this section applicable? This section is applicable to an individual, HUF, AOP, BOI, AGP. In simple words, it is applicable to those people who are paying tax at what rates? Slab rate. If you are paying tax at slab rate, then for you this section is applicable. This section 115 BSc is applicable. Now it does not matter. This section 115 BSc is applicable to both resident and non-resident. It is applicable to both resident as well as non-resident. It does not matter whether you are a resident or non-resident. It is applicable to both of you. Now we are going to do a comparative analysis of normal provision, also called as optional regime. Normal provision, also called as optional regime. We'll compare that normal provision with 115 BSc, also called as default tax regime, also called as what's a default regime. Okay, so why are we doing this comparative analysis? You'll understand it better. What is the changes? What is the difference? You'll understand it better. Now, what is the tax rate under normal provisions? Under normal provisions, up to 2.5 lakhs or up to 3 lakhs, up to 5 lakhs, you don't have to pay tax. Up to 2.5 lakhs in normal cases, if you are a senior citizen, then the basic exemption limit is 3 lakh rupees to you. And if you are a super senior citizen, the basic exemption limit is 5 lakh for you. But however, this basic exemption limit is 3 lakh rupees irrespective of your age under 115 BSc. Okay, I'll first discuss one by one. So up to 2.5 lakhs, no tax. Up to 2.5 lakhs, no tax. From 2.5 to 5 or 3 to 5, the tax rate is 5%. From 5 to 10, it is 20%. And if your income is more than 10, the tax rate is 30%. You will have to pay tax at what rate, sir? 30%. Under which regime? Under normal provision or under optional regime. However, under 115 BSc or under default regime, you don't have to pay any tax up to 3 lakh rupees of your income. Then, if your income is from 3 lakh rupees to 6 lakh rupees, the tax rate applicable to you will be 5%. If it is 6 lakhs to 9 lakhs, 10%, 9 lakhs to 12 lakhs, 15%, 12 to 15, 20%, and more than 15, 30%. So basically what is happening under default regime? Your income is increasing by 3 lakh and tax is increasing by 5%. See, up to 3 lakhs, nothing. Then 3 to 6, tax increase by how much, sir? 5%, which is 3 to 6, it is 5%. Then from 6 to 9, 10%. Income increased by 3 lakhs, tax increased by 5%. Then from 9 to 12, income increased by 3%. Sorry, 3 lakh. tax increased by 5%. Then from 12 lakhs to 15 lakhs, income increased by 3 lakhs, tax increased by 5%, which is 20 lakhs. And if it is more than 10 lakhs, if it is more than 10 lakhs, how much is it, sir? It is, if it is more than 15 lakhs, sorry, how much is the tax rate? 30%, which is the highest tax rate. Okay. 115 BSc, up to 3 lakh rupees of your income, no tax. 3 lakhs to 6 lakhs, 5%. 6 lakhs to 9 lakhs, 12%, 10%. 9 lakhs to 12 lakhs, 15. 12 lakhs to 15 lakhs, 20. And more than 15, 30% is the tax rate. Then, sir, do I have to pay something called as surcharge? Yes, you will have to pay something called as surcharge. Sir, how much is the surcharge which I have to pay? If your income is more than 50 lakhs, if your income, in the sense, if your total income is more than 50 lakhs, only then surcharge will be applicable. So if your income is from 50 lakhs to 1 crore, 10% of tax amount is surcharge. And if your income is from 1 crore to 2 crores, 15% of tax is your surcharge. And if your income is from 2 crores to 5 crores, surcharge is 25%. And if your income is more than 5 crores, the surcharge which is applicable to you will be 37%. Now, what is the surcharge under default regime or under 115 BSc? It is same. If your income is from 50 lakhs to 1 crore, 10%. 1 crore to 2 crores, 15%. More than 2 crores, 25%. Here, we don't have this 37% criteria. So if your income is more than, if your total income is more than 2 crores, you have to pay 25% surcharge on the tax amount. Then, needless to say, there is 4 incomes, which is dividend income, short-term capital gain under section 111, long-term capital gain under section 112 and 112A, for which maximum amount of surcharge is they are going to take is 15%. This is applicable to both. See, basically, major change is where, sir, the major change, the major difference between 115 BSc and normal provision is with respect to tax rate. Correct? Major changes with respect to tax rate. Surcharge, it is same, except that this 37% surcharge is not there under default regime. Then, sir, what about rebate? Is rebate applicable for 115 BSc people also? Yes. See, normally, what is the rebate? If your, when will you get a rebate? If your total income is up to 5 lakh rupees, only then you will get a rebate. Under normal provision, you will get a rebate if your total income is up to 5 lakh rupees. How much rebate will you get? You will get a rebate of the tax amount or 12,500, whichever is less. And how much rebate are you going to get? Whatever tax amount is there or limit of 12,500, whichever is less. But if you are a person who is opting for, if you are a person who is paying tax under section 115 BSc or under default regime, then for you, the rebate will be given if your total income is up to 7 lakh rupees. Oh. Please note, in normal cases, it is up to 5 lakhs. But in case of 115 BSc, if your income is up to 7 lakh rupees, you will be getting rebate. How much is the rebate? Tax amount or 25,000. Tax amount or 25,000, whichever is less amount. Whatever amount is the tax which you have to pay, or 25,000, whichever is less, is the rebate which is going to be given to you. So if a person's income is 5 lakh rupees, then under normal provision, what is the tax which he has to pay, sir? If the total income, so up to 2.5 lakhs, he does not have to pay anything. And from 2.5 lakhs to 5 lakhs, he'll have to pay 12,500. So 12,500 is the tax which he has to pay. Now, because his income is not more than 5 lakh rupees, he'll get a rebate under section 87A. How much? Tax amount or 12,500, whichever is less. Here tax amount and both the amounts are same. So he'll get a rebate of 12,500. So tax which he has to pay is 0. Tax which he has to pay is how much? 0. This is under normal provision. Sir, what if it is 115 BSc and my income is 6 lakhs? Say my total income is 6 lakh rupees and I am following which provisions are 115 BSc. Now calculate the tax liability if your income is up to 6 lakhs. Sir, see, sir, up to 3 lakhs, nothing. And from 3 lakhs to 6 lakhs, it is 5%. Okay. So up to 3 lakh rupees, I don't have to pay any tax. 3 lakhs to 6 lakhs. On that additional 3 lakhs, I'll have to pay tax of 5%. 3 5 are 15,000 rupees. So the total tax liability which I have to pay is 15,000. Now, will I get a rebate? Yes. Sir, why will I get a rebate? Because your total income, how much is your total income? 6 lakh rupees. Your total income is up to 7 lakh rupees. Correct? It is within the limit of 7 lakhs. So you'll get a rebate under section 87A. How much is the rebate? Sir, it will be tax amount which is 15,000 or what? Or limit. How much is the limit? 25,000. Whichever is less. 15,000 rupees. Net tax which you have to pay is 0. Okay, rebate will be given for both the categories, but when is the rebate given, that is important. So in normal scenarios, the rebate will be given if your total income is up to 5 lakh rupees, and in case of 115 BSc, rebate will be given if your total income is up to 7 lakh rupees. How much is the rebate? Whatever amount of tax is there, or 12,500, whichever is less. And in case of 115 BSc, whatever tax amount is there, or 25,000, whichever is less, will be the rebate. But under 115 BSc, this is the normal rebate. Under 115 BSc, there is one extra rebate which they will give you. There is one different calculation which you have to do for claiming that extra amount of rebate. Normally what happens, if your income is up to 7 lakhs, only then you are going to get a rebate. Sir, what if my income is more than 7 lakh rupees? Normally will not get a rebate. Hey, rebate under section 87A will be given to whom? 115 BSc people only when the total income is up to 7 lakh rupees. But however, what lawmaker says is, hey 115 BSc person, hey person, if you have followed 115 BSc and if your total income is slightly, how much sir? Slightly more than 7 lakh rupees. Slightly, little bit more than 7 lakh rupees, then I will give you an extra, then also I'll give you a rebate. See, normally rebate will be given only if your total income is up to 5 lakh rupees. Up to how much sir? 7 lakh rupees. And under normal provision, rebate will be given only if the total income is up to 5 lakh rupees. Now, normal provision, even if it is 5 lakh 1,000 rupees, even if I have earned 1,000 rupees extra, or if my income is 5 lakh 1 rupees, even if I have earned 1 rupees extra, I will not get a rebate under normal provision. I will not get a rebate under normal provision. But 115 BSc does not tell that. They say if your income is slightly more than 7 lakh, then also I will give you rebate. For example, let us take a case wherein my income is 7 lakh 5,000. My income is how much sir? 7 lakh 5,000. Now, can I say it is not too much more than 7 lakh rupees? Say if my income is 7.5 lakhs, meaning 7 lakh 50,000, then the difference is more. Meaning from 7 lakh 7.5 lakhs, the difference amounts to what sir? 50,000 rupees. But when I compare 7 lakh with 7 lakh 5,000, the difference is only 5,000. So my income is slightly more than 7 lakh rupees. Lawmaker says, even when your income is slightly more than 7 lakh rupees, I will give you a rebate under section, if you are following 115 BSc, I will give a rebate to you under section 87A, even if your income is slightly more than 7 lakh. Let us take that my income is 7 lakh 5,000. Now, what is the tax on this under 115 BSc? If I want to calculate tax, can I say up to 3 lakhs, I don't have to pay anything. Then from 3 lakhs to 6 lakhs, I will have to pay how much? From 3 lakhs to 6 lakhs, I will have to pay 15,000 rupees. And from 6 lakhs to 7 lakhs 5,000, which is nothing but 1 lakh 5,000, I'll have to pay how much sir? I'll have to pay 10%, which is 10,500 rupees. So my total tax liability comes to how much? 20,500 rupees. Correct, not correct? My 25,500 rupees is my total tax liability. 25,500 rupees. Now what are they telling? I will give you a rebate under section 87A, where the total income is slightly or marginally more than 7 lakh rupees. Then rebate under section 87A shall be calculated as below. Step number 1. Check what is the difference between total income and 7 lakh. Now, what is the different step number 1? What is step number 1 telling? Total income, which is 7 lakh 5,000 minus 7 lakhs. So what is the extra income which I have earned, sir? 5,000 rupees is the extra income. So step number 1 is there, done. Step number 2, calculate the tax on total income. Step number 2, we have calculated the tax on total income. How much is the tax on total income, sir? The tax on total income comes to 25,500 rupees. This tax is before cess. Okay, so it is 25,500. and the extra income which I have earned is 5,000 rupees. Now, what is the question? Point number 3, step number 3. Is your answer in step number 2 more than answer in step number 1? Yes. Now, is this 25,500 more than 5,000 rupees? Yes, sir, it is more. Then you will get a rebate. What is that rebate? B minus A, which is nothing but 25,550 minus 5,000 rupees. So, how much rebate will I get? In this scenario, I'll get a rebate of 25,500 minus 5,000. 20,500 rupees is the rebate which is going to be given to me. Please note. Rebate under section 87A. Rebate under section 87A for default regime is calculated under two scenarios. Normally, rebate will be given only when the total income is up to 7 lakh rupees, but you will also get a rebate if your total income is slightly more than 7 lakh rupees. For this, you will have to do the computation. How is the computation? See what is that extra income you are earning. Then calculate the tax on your total income. Once you calculate the tax on your total income, compare that with your extra income which you have earned. If the difference is, if the tax on total income is more than the tax on is more than the extra income, then you will get a rebate. How much is the rebate? The difference between the tax on total income and the extra income. That is the rebate. Okay, so this is one rebate calculation. Now, before I go forward, once again, I'll just revise whatever we have discussed. Okay, once again, we'll revise whatever we have discussed because this is very important. Now, please note, normal provision. Under normal provision, what is the tax which I have to pay? One second. Hello, hello. Yes, sir. Now, please note, under normal provision, what do they say, sir? Normal provision tax rate is up to 2.5 lakhs, 3 lakhs or 5 lakhs. There is no tax. From 2.5 lakhs or 3 lakhs to 5 lakhs, it is 5%. 5 lakhs to 10 lakhs, 20%. More than 10 lakhs, 30%. But under 115 BSE, irrespective of who you are, whether you are a senior citizen, super senior citizen, or a normal person, up to 3 lakh rupees, you don't have to pay any taxes. 3 lakhs to 6 lakhs, 5%. 6 lakhs to 9 lakhs, 10%. 9 to 12, 15%, 12 to 15, 20%, and more than 15, it is 30% is the tax rate. Then surcharge is applicable under both the cases if the total income is more than 50 lakh rupees. So if it is more than 50 lakhs up to 1 crore, 10% is the surcharge in both the cases. If it is more than 1 crore and up to 2 crores, it is 15% in both the cases. If it is 2 crores to 5 crores, it is 25% in both the cases. However, if it is more than 5 crores, it is 37% only under normal provision. This 37% criteria is not there for 115 BAC. Then for 4 incomes, which is dividend income, short-term capital gain under 111A, long-term capital gain under section 112 or 112A, for that maximum surcharge which they are going to levy is 15% in both the cases. Then we just now saw the provisions with respect to rebate. Next. Sir, is health and education cess applicable? Yes. Whenever there is a tax which you have to pay, compulsorily 4% health and education cess you will have to pay. Whenever there is an income tax liability, whenever you are liable to pay income tax plus extra 4% health and education cess, you have to pay. Now, please note, this cess is calculated on tax amount, including your surcharge. So, this will be calculated on tax amount, including your what, sir? Surcharge. So, first you will calculate that whatever tax is there, tax on total income. On that, you will levy surcharge. Surcharge will be levied only if the total income is more than 50 lakh rupees. Then once the charge is levied, whatever amount you have got no, on that you will have to levy health and education cess. On this you will have to levy what, sir? Health and education cess. Now, sir, oh sir, by seeing all these things, sir, what I understood, no sir, oh sir, by seeing all these things, what I understood, you know, sir, what did you understand? That, sir, 115 BSc is better. Sir, see, sir, 115 BSc is better. How is it better? Sir, see, sir, if my income is 15 lakh, let us take an example. Let us take an example. By seeing all these things, what do you feel? That 115 BSc is better. And how do you say it is better? Sir, let us take an example, sir. Say, let us say my total income is 10 lakh. Now, sir, please compute the tax under normal provision and please compute the tax under section 115 BAC. Now, under normal provision, if my income is 10 lakhs, what is the tax which I have to pay? Sir, see, sir, up to 2.5 lakhs, I don't have to pay any taxes. Correct, sir? Yes. Sir, from 2.5 lakhs to 5 lakhs, assuming it is an income of Mr. Dilip, age is 32 years. Up to 2.5 to 5 lakhs, the tax will be 12,500. And 5 lakhs to 10 lakhs, the tax will be 1 lakh rupees. Sir, how did you get this amount? Can you please show the calculation? Yes. So for this 2,50,000, 5%. And for this 5 lakh rupees, the tax rate is 10%. So 20%. Tax rate is how much, sir? 20%. So what is the tax which I have to pay? 1,12,500. To this, I'll add surcharge. It is not applicable because total income is not more than 10 lakh. Therefore, my tax including surcharge is 1,12,500. To this, I'll add health and education cess of 4%. So 12,500 into 4%. 1,12,500 into 4%. 4,500 is the health and education cess. So total tax will come to 1,17,000 rupees. Now, what about normal provision, sir? Oh, sir, what about normal provision? Under normal provision, can I say, sorry, what about 115 BSc? Under 115 BSc, up to 3 lakh rupees, there is no tax. From 3 lakh rupees to 6 lakh rupees, the tax rate is how much? From 3 lakhs to 6 lakhs, the tax rate is 5%. So on 3 lakh rupees, 5% if I apply, it comes to 15,000. From 6 lakh rupees to 9 lakh rupees, the tax rate is 10%, which comes to 30,000 rupees. And from 9 lakh rupees to 10 lakh rupees, the tax is how much, sir? 15%, which comes to another 15,000 rupees. So total tax comes to how much, sir? 60,000 rupees. Are total tax comes to how much? Oh, students, 60,000 rupees is the total tax. On the 60,000, add surcharge. No surcharge. Why, sir? No surcharge because, tell me why no surcharge? Because the total income is not more than 50 lakh rupees. Now to this, I'll add health and education cess. Yatro students, 4%. How much? ₹2,400. So my total tax liability will be 62,400 rupees. This is the total tax which I have to pay. Sir, now you only see, sir. Of course, 115 BAC is more beneficial, no, sir. This is more beneficial wherein I am paying less tax, no, sir. See, sir, how much tax I'm going to save? 62,400 minus 1,17,000. Sir, 54,600 rupees I am going to save if I follow 115 BSc, sir. Oh, sir, I am going to save 54,600 rupees if I follow 115 BSc, sir. Yes, you are right. You are right. You are perfectly right. But whatever normal provision, whatever we have discussion we have done till now, whatever assumption you are making is perfectly right. But there are some, see, when the government is allowing you to pay 54,600 rupees less with the same income, with this income is same, income is not changed, income is same, but the tax amount has changed. The tax amount which is has changed. If the government is giving you a benefit to pay a lesser tax, don't you think government is also going to take a lot of benefits from you? Now let us see what are the different benefits which you have to forgo if you follow 115 BSc. So if I am a person who opts for 115 BSc, following exemptions and deductions will not be applicable if a person opts for 115 BSc. So if a person is following 115 BSc, these benefits will not be given to him. I'll repeat once again. Or if you are following 115 BSc, you will not get these benefits. What will I not get, sir? Now, heads of income wise, I'll tell you, or different topic wise, I'll tell you what are the benefit which you have to forgo. Under income from salary, following is not available. You will not get following things. You will not get leave travel concession. Whatever leave travel concession benefit you get, no. Leave travel concession, if you travel by air economy class, you will get, if you travel by any mode other than air, then first class AC ticket or deluxe class fare, etc. Some benefit you are going to get, correct? Exemption under section 10(5). That exemption will not be given to you. Then HRA, if the company is giving you HRA, that HRA will become fully taxable. No deduction or exemption under section 10(13)(a) will be given to you. Then whatever different types of allowances your company is paying you, whatever different types of allowances your company is paying you, it will become fully taxable. Allowances under section 10(14). You remember, you cheat the cat. Underground allowance, commutation allowance, hostel allowance, education allowance, etc. These allowances you will not get any benefit. You will not get any benefit of these allowances. These allowances will be fully taxable, except transport allowance, traveling allowance, tour allowance, and conveyance allowance. So basically, these are your travel related allowance that will be given to you. Transport allowances to handicapped employee, traveling and tour allowances, daily allowances, and conveyance allowance. Only these allowances will be given. Then, please note. Now, yeah, no deduction under section 16 will be allowed. Section 16 talks about 3 deduction. Section 16 talks about standard deduction. Section 16 talks about deduction for professional tax and entertainment allowance. You will normally not get deduction of professional tax and entertainment allowance. However, you will get a deduction of standard deduction. Standard deduction of 50,000 rupees will be allowed. So 50,000 rupees standard deduction which is there, no? If you are earning salary income, standard deduction of 50,000 will be given both to a person who is following normal provision as well as a person who is following 115 BSc. Okay. No deduction under section 16 except which deduction? Standard deduction of 50,000. Section 16 talks about 3 types of deduction: standard deduction, then professional tax, and entertainment allowance. Professional tax, entertainment allowances deduction you will not get. However, standard deduction you will get. Standard deduction will be given to both the people, whether you are following normal provisions or 115 BSc. Then, if you are having any income from house property, then if you are having a self-occupied property, do you remember up to 3 lakh rupees or 30,000 deduction you will get? Up to 2 lakh rupees or 30,000 deduction you will get. That deduction I will not give you. No interest deduction will be allowed if you are having any self-occupied property. However, in case of let out property or deemed to be let out property, there is no change. Whatever you were doing for normal provision, same thing is equally applicable to you. Then under PGBP also they have taken some benefit. Yes, you will not get any additional depreciation benefit. Do you remember, if you are a power generating units or power or you are a manufacturing sector, if you are in a power sector or manufacturing sector, you will get something called as additional depreciation under section 32 subsection 1 clause 2a. That additional depreciation will not be given to you. And if you make any donation to scientific research under section 35 or 35(2)(a), that donation also will not be allowed as deduction. Now please note, section 35 talks about scientific research. There are 2 types of scientific research. One is called as in-house scientific research, one is called as donation to research organization. This in-house will be allowed, but if you make any donation to research organization, that deduction will not be given to you. No deduction for 35AD, that is specified business. Or do you remember, there are totally 14 businesses which are called as specified businesses. For these specified businesses, you will not get any deduction under 35AD. Then what about capital gain, sir? No change in capital gain, completely same. So whatever you are following under normal provision, if you are following 115 BSc, for you also the same thing is applicable under capital gain chapter. Income from other sources, is there any change? Income from other sources, family pension deduction under section 57 is not available. Family pension, if you have any family pension, no, 1/3 of your pension or rupees 15,000, whichever less, is allowed as deduction. But if you follow 115 BSc, no, I will not give. You will not get any exemption for 1032, that is clubbing of minor income. If you remember, when you club your minor's income in your hands, then 1,500 rupees exemption you will get. but that will not be given if you follow 115 BSc. And if you are an MLA MP, then your daily allowance and constituents allowances which were exempt normally will now become fully taxable. So if you are an MLA MP, your daily allowance and constituency allowances are normally exempt, but now they will become fully taxable if you follow 115 BSc. And deductions, you remember deductions, chapter 6A deductions, ATC, ATC, CEC, ATC, CD, 80, E, 80, E, all these deductions which are there, they will not be given to you. All the deduction, no deduction will be given to you under chapter 6A except 80 JJAA and except 80 CCD 2. Only these two deductions will be given. Further, no benefit for SEZ units for under section 10AA. So if you are an SEZ unit, then your export profits are exempt under section 10AA. That exemption benefit will not be given to you. And sir, what about set off and carry forward topics? Is there any thing which they have taken under this topic also? Yes. Loss of house property. See, normally what happens, your house property loss up to 2 lakh rupees, you can adjust with other losses, other incomes, correct? But that will not be given to you. Loss of house property of current year cannot be adjusted with income under any other head. Whatever loss you have from the house property in the current year, it cannot be adjusted with income under any other head. No set off of brought forward losses or depreciation loss, if such loss is due to point number 1 or to point number 5. So if you have any loss because of these reasons, point number 1, 2, 3, 4, 5, correct? If you have losses because of any of the above reasons, those losses will not be allowed to be set off. Last year I had incurred some losses. Now I have carry forwarded to this year. This year, can I set off those losses? No. If that losses is because of above reasons, no. Meaning, in simple words, if I am doing business and in last year if I had a business loss because of depreciation, additional depreciation, not depreciation. If I had a business loss because of my additional depreciation, I had claimed a reduction of additional depreciation, then can I claim the benefit of that additional depreciation? Current year, can I adjust that loss, sir? Lawmaker says, ille, no, I will not allow you to adjust. Other important points. What are the other important points? Income which are taxable at special rates will be continued to be taxed at special rate irrespective of whether a person is opting for 115 BSc or not. Meaning, for example, your capital gain income taxable at 20%. Short-term capital gain income 111 is taxable at 15%. Correct? So those special income. Then we have this lottery, betting, gambling income, casual income. They are taxable at 30%. These are all special incomes. They will be taxable at special rates only. Then alternate minimum tax provision shall not be applicable to a person who is following 115 BSc. So if you opt for 115 BSc, EMT is not applicable to you. Now please note. Every year when you are filing your income tax return, you have an option to select whether you have to pay tax under normal provision or under 115 BSc. Sir, when can I exercise this option? So if you are a person who does not has any business income, totally how many heads of income are there? 5 heads of income. So in this, if you don't have what type of income, if you don't have business income, then every year at the time of filing of your return, income tax return, you have an option to either select for 115 BSc or come out of 115 BSc. You have that option. But if you have a business income, then in year 1, if you select that you want to opt for 115 BSc, year 2 also you will have to opt for 115 BSc. Year 3 also you will have to opt for 115 BSc. Now, if in year 1 you have opted for 115 BSc and in year 2 if you opt out of 115 BSc, meaning if you come out of 115 BSc, then never in future you can again go for 115 BSc. Never in future you can again go for what, sir? 115 BAC. Assessee can opt. So this is what is written over here. Story, you can read it later. This is the major amendment. That is the most important amendment. Other amendments are not so major. Now for cooperative society, they have specified tax rates. So up to 10,000 of income, 10% is a tax rate. Income, if the income of cooperative society is from 10,000 to 20,000, 20%. From 20,000, more than 20,000, it is 30%. And surcharge is applicable if the total income is more than 1 crore rupees, it is 7%. If it is more than 10 crore rupees, it is 12%. This is only for cooperative society. Then Sir, is there any amendment under the head salary, income from salary? Yes. Leaves, if you remember, there is a provision called as leave salary. So leave salary is exempt under section 10 AA. That limit was 3 lakh rupees, but now they have increased that limit of 3 lakh rupees to 25 lakh rupees. Leave leave salary or leave encashment. So that limit has been increased up to 25 lakh. Then rent-free accommodation. If you remember RFA, it is a perquisite. Rent-free accommodation is what, sir? It is a perquisite. So here we have whether it is rented or owned. Now there is a mechanism of calculation of what, sir? There is a mechanism of calculation of rent-free accommodation. It is up to 10% of salary, 7.5% of salary, etc. Here there is a small change. What is the change, sir? Now they have changed the limit, which area you are staying, that amounts have been changed, which area you are staying, and also the limits. Before it was 10%, 15%, 20%, something like that, but now they have changed it. When rent-free accommodation is provided by any person when the accommodation is provided by other than government employer, and such accommodation is owned by the employer, and if that accommodation is owned by the employer, then how much will be value of rent-free accommodation? Value of rent-free accommodation will be, if the area in which you are staying, the population of that area is up to 15 lakhs, then 5% of salary will be your rent-free accommodation. If it is more than 15 lakhs up to 40 lakh rupees, 7.5% of salary, and if it is more than 40 lakh rupees, it is 10% of salary. These limits has been changed, as well as this limit. Before it was more than 25 lakh rupees, more than 25 lakh, but now they have increased up to 40 lakhs. So 15 lakhs, 15 to 40, and more than 40. Here it is 5%, 7.5%, and 10%. This is a change, important change. Similarly, if the property is taken on lease or rent, if the person has taken that house on lease or rent, then it was actual rent or 15% of salary, which is now reduced to actual rent, or 10% of salary, whichever is less, will be exempt. So it depends on whether the property is owned or it is taken on rent by the employer. If it is taken owned, then this is the limit. If it is taken on rent, then 10% of salary or actual rent paid, whichever is less. Then under business income also there is some change. Yes, 35D talks about what's a preliminary expenses. Now there are a list of some expenses which are called as preliminary expenses. Now what is 35D telling? These preliminary expenses are allowed in 5 equal installments starting from the year in which the business has been commenced. Now what they are telling is one clarification they have issued, not so important amendment. What they have told, now whatever details of preliminary expenses is given, that is required to be authenticated. A statement is required to be, the statement containing the particulars of specified expenditure is required to be furnished 1 month prior to the due date of filing income tax return. Now what they are telling is, any person who is claiming deduction under section 35D will have to submit a chartered accountant report 1 month before filing of his income tax return, that this is all the expenses which are taken as deduction under section 35D. So one CA report has to be attached. That is what this point is telling, when it should be attached 1 month before filing of returns. Then there is something called as a section called as 43B. What is this 43B? Certain deductions to be allowed on actual payment basis. Now 43B, that if you remember, the memory technique for this was flirt bonus. Okay, so there are totally list of 6 expenses which is allowed a deduction only when you pay those expenses within the due date of filing income tax return. Here they have added one more item. What is that one more item? The payment made to MSME, small, micro, medium enterprises. Any sum that will be allowed a deduction only if you pay them. Any sum payable by assessee to micro, small enterprises beyond the time limit specified under section 15 of Micro, Small, Medium Enterprises Act 2006. If the sum payable by the assessee to micro and small enterprises is paid as per the agreement or within 15 days, if there is no agreement, then deduction can be claimed on accrual basis if mercantile method is followed. However, if the sum payable to micro and small enterprises is not paid within the agreement time or within 15 days, then deduction will be allowed only when it is actually paid. That is what this point is telling. Meaning certain expenses which will be allowed on payment basis. See, normally what they are telling is, normally as per your agreement or within 15 days, if there is no agreement within 15 days, you are required to make the payment to MSME. If you don't make the payment to them within this time limit, then what will happen? Then in the year in which you make the payment, no, not when you book that expenses, but when you make the payment for that expenditure, in that year you will have to claim the deduction of that expenses. Now, there is something called as presumptive taxation under section 44 AD for business people and 44 ADA for specified professions. Now here they have added one extra. See, normally for business people the limit was how much, sir? If their turnover is up to 2 crore rupees, they can opt for 150. They can opt to pay tax at presumptive basis, and for professionals the limit was 50 lakh rupees. Now they have increased this limit. What are they telling? For business people the limit will be 10 crore, and for professionals the limit will be 75 lakhs. If this limit of 10 crore, the limit of not 10 crore, sorry, the limit of 3 crores. 3 crores or 75 lakhs. The limit of 3 crores or the limit of 75 lakhs will be applicable if 95% of their total payments and 95% of their total receipts is through banking modes. Meaning what, sir? Whatever amount you are receiving for your sales and whatever amount you are paying for your expenses, whatever income you are earning, whatever expenses you are incurring, 95% of that is through which modes, sir? Banking modes. It is through banking modes. This section is applicable. Section 44 AD is applicable for any type of business except 44 AD and 44 AE whose total income or gross, whose total turnover or gross receipts is up to 2 crore rupees. This section is now also made applicable to those people whose total turnover is up to 3 crore rupees if the aggregate of cash receipts in a relevant previous year is less than or equal to 5% of total receipts or total turnover. Meaning what are they telling? If your normally everything should be in banking modes. Can it be in cash, sir? Yes, it can be in cash. How much, sir? Maximum 5%. Maximum how much, sir? 5%. It can be less than equal to 5. So if your total sale receipts, if your total turnover which you have made, whatever sales you have made, no, for that the money which you have received, if 5% of that money is received in cash, no problem. If it is more than 5%, problem is there. Then for you the limit of 2 crores will be applicable. Similarly, in case of profession, this limit is up to 75 lakhs. Sir, in capital gain, is there any change? See, in capital gain, only one small change is there. 150 section 54 and 54F, they talk about what? They talk about exemption. Your whatever long-term capital gain you are earning, that is exempt under section 54 and 54F, etc. if you invest the money in some residential house property. Now here, the maximum amount of exemption which you can claim is restricted to 10 crore rupees. Now, normally how much exemption was allowed, sir? How much exemption was allowed under 54 and 54F? Capital gain amount or amount invested, whichever is less. But now they have added one more item. Now it is either capital gain amount or amount invested by you or limit of 10 crores, whichever is less. They have added a limit of 10 crore rupees in this particular sections, two sections, which section 54 and 54F. Then they have told one more point telling that capital gain arising from transfer of market linked debentures and units of specified mutual fund will always be short term capital gain. So if you are selling what's a market linked debentures or units of specified mutual funds, then the capital gain which you are going to get is always treated as short term irrespective of your period of holding. Sir, is there any change in income from other sources? One small change is there. And once we discuss this, I think one more topic is there, and this income tax is done. Now, what is this changes in income from other sources? Now, let me just give an example to explain this concept to you. I'll give the example at the end. Now, if you remember, we discussed something called as section 80C, which talks about deductions for certain payments which you are making. Now here, if you pay life insurance premium, then whatever premium you are paying, that is allowed as deduction under section 80C. Now, if you remember, here we also discussed one point called as section 1010D. What did we see in this section 1010D? What is 1010D telling? If any person dies, if any person who has taken life insurance policy dies, or if he completes the maturity period, then the amount received by nominee at the time of death, or amount received by the person himself upon amount received by nominee at the time of death, or the amount received by the person himself upon maturity of the policy is what, sir? Exempt under section 1010D. Correct? I'll repeat once again. Now please note, Mr. A has taken a life insurance policy for 10 lakh rupees. Okay, this policy has taken in the year 2015, and this policy is for 20 years. Now for 20 years he will have to pay something called as premium. Correct? He'll have to pay life insurance premium. Now this premium is allowed as deduction under section 80C. Correct? Not correct? Yes, sir. It is correct. Now what happens is, two possibilities are there in this 20 years period. No, in this 20 years, this person can either die or he can survive. Meaning Mr. A can die during this 20 years period, or he can survive this 20 years. If he dies, then the 10 lakh rupees plus some extra amount, which is bonus, will be given to whom? The nominee. Nominee in the sense, whoever Mr. A says that you please give this money to this person, that person will get this 10 lakh rupees, that person will get this 10 lakh rupees, and therefore that amount which he is going to get is exempt. Whatever amount nominee is going to get is exempt under section 1010D. It is exempt under section 1010D. But however, if Mr. A survives, then this 10 lakh rupees plus bonus, after 20 years also, if he does not die, then after the 20 years, Mr. A will get this 10 lakh rupees along with some bonus. He will get this some bonus also. He will get this 10 lakh rupees and he will also get something called as bonus. Now what happens over here? After this 20 years period, no, when he is surviving, then whatever amount he has received will be exempt under section 1010D only if the premium paid by him for this policy is either up to 20% of the sum assured or 10% of the sum assured. Correct? So 20% of the sum assured, 20% of the sum assured if the policy is issued or if he has taken the policy before 1/4/2012, and 10% of sum assured if the policy is taken on or after 1/4/2012. Meaning, what, sir? If the premium every year, whatever premium he is paying, if the premium paid by him is less than 20% of sum assured, it will be exempt if the policy is issued before 1/4/2012, and if the policy is taken on or after 1/4/2012, then the premium amount should be less than 10% of sum assured. For example, in our case, the sum assured is 10 lakh rupees and I have taken the policy in the year 2015. So how much should be my premium, sir? My premium should be maximum 1 lakh rupees. How much should be my premium, sir? My premium should be maximum 1 lakh rupees. If the premium which I am paying, which is nothing but 10% of sum assured, if I am paying a premium more than 10 lakh rupees, then whatever amount I am going to receive upon my maturity, this amount will be fully taxable. Or whatever amount I am receiving on my maturity, it will be fully taxable. Correct? This is the provision which we have discussed in the classroom. Now, what is the change in this, sir? What is the change in this? One small change is there. Now, instead of studying 2 years, before we were studying only 2 years. Which is this 2 years? Which is policy issued before 1/4/2012 and policy issued on or after 1/4/2012. This is what we were studying normally in the classroom. Now one extra year has been added, policy issued on or after 1/4/2023. So that is that extra item. What is that extra item on or after 1/4/2023? So for this, what is the extra item which they are telling, sir? What they are telling is, I'll just discuss here only. If the policy is issued on or after 1/4/2023, then if you satisfy two conditions, only then the amount received on maturity will be exempt. Please note, amount received upon death is always exempt. If the nominee receives the amount upon death of the person who has taken the policy, then it is always exempt. But however, if the amount received is upon death, if the amount is received upon death, if the amount is received when? If the amount is received upon death of the policy holder, then upon maturity of the policy by the policy holder himself, then, and if the policy is taken on or after 1/4/2023, then you should satisfy two conditions to claim exemption under section 1010D. What are two conditions? Condition number one is that the premium which is there, no, the premium should not be more than 10% of sum assured. Okay, the premium which you are paying should not be more than 10% of sum assured. Now your new condition has been added, which says the total premium which you are paying should be less than 5 lakh rupees. Premium should not be more than 10% of sum assured, and the total premium which you are paying should be less than 5 lakh rupees. It should be less than 5 lakh rupees. This both the conditions should be satisfied if you want to claim any deduction under section 1010D. This is all about this exemption. Sorry, this is all about this amendment which is there. Sum received including the amount allocated by way of bonus under life insurance policy other than unit linked policy or Cayman insurance policy, which is not exempt under section 1010D. Following table summarizes the exemption under section 1010D. So exemption will be applicable if you follow the following. If the policy is issued before 1/4/2001, then the premium amount should not be more than 20% of sum assured. Policy is issued after 1/4/2012, then the premium which you are paying should not be more than 10% of sum assured. If the policy is issued during the year 2012-13, then it was 20% of sum assured for ATU disability people. And if you are an ATU disability people, the limit was 15% if the policy is issued after 1/4/2013. Now, anyways, this is something which we have already discussed in the class. Now comes the amendment part. In respect of policies issued on or after 1/4/2023, if the policy is issued when, sir, on or after 1/4/2003, exemption will be given only if you satisfy the following condition. Any sum received under life insurance policy, including the sum allocated by way of bonus, is exempt. However, exemption will not be available if the premium exceeds 10% or 15% of sum assured. Further, exemption would not be available if the premium payable exceeds 5 lakh rupees during the previous year of the term of policy. During the term of that policy, the policy is taken for 15 years, 20 years, etc. During the term of that policy, if the premium which you are paying is more than 5 lakh rupees, then also exemption will not be given to you. Sir, what if I have more than one life insurance policy? Then the total premium should not be more than 5 lakh rupees. What if it is more? It will be taxable. For example, see, in all the cases, when is the policy taken? That is important. Policy is taken on 2013, 1/4/2013. So what is the limit? 10%. Sum assured is 60 lakh rupees, and the premium which I am paying is 6 lakh rupees. Is it within that limit of 10%? Yes, it is within the limit. So what will I get an exemption? Yes, I will get an exemption. Whatever amount I receive, 70 lakh rupees, completely exempt. Second case, policy is taken on 1/4/2023. How much is the premium which I am paying? 6 lakh rupees. Policy is 60 lakh rupees policy. Premium which I am paying is 10% of that, which is 6 lakh. However, please note, though it is within the limit of 10%, can I say the premium is more than 5 lakh? Yes, sir, the premium is more than 5 lakhs. Now this 70 lakh rupees which I receive at the time of maturity, it is fully taxable. Sir, what if the 70 lakh is received upon death? Then it is exempt. If the amount is received upon death, completely exempt. Only if it is received upon maturity, it is taxable. Next, I have taken the policy on 1/4/2023. Policy is for 50 lakh and I am paying a premium of 5 lakh. 5 lakh is 10%, so no problem. And the amount is also not more than 5 lakh, therefore no problem. In this case, whatever amount I am receiving is fully exempt. Sir, what if I have taken more than one policy? If you see, I have taken 3 policies for which 2 policies premium is not more than 5 lakh rupees. One policy premium is more than 5 lakh rupees and I have received this totally 1 crore 25 lakhs. Now what will happen, sir? Now they say the total premium which you are paying should not be more than 5 lakhs. Can I say the total premium is more than 5 lakhs? Yes. Whatever amount I am receiving, fully taxable. Fully taxable. This new amendment they have made. Now set off and carry forward. If a person is opting for 115 BSc, this is already discussed by me. The loss under head income from house property cannot be set off with any income. Okay, if you have house property loss, that house property loss cannot be adjusted with income under any of the head. Then deductions under chapter 6A. If a person is opting for 115 PSC, he will not get any deduction under chapter 6A, already discussed, except the deduction under section 80 CCD2 and except the deduction under section 80 JJAA. Now under deduction chapter, this is the last amendment. Under deduction chapter, what they have done, sir? Under deduction chapter, they have added one more deduction called as 80 CCH. 80 CCH. This is similar to your 80 CCD2. Sorry, 80 CCD. 80 CCH is similar to your 80 CCD. Now 80 CCD talks about contribution to national pension scheme or central government pension scheme, just like that. 80 CCH has been brought into picture for Agniveers. See, basically what happened few years before is, during the time of Corona, etc., because there was a lot of job insecurity, etc., a lot of people has lost the job. The government had come with the government had come up with a concept of Agnipath scheme. What is happening under this Agnipath scheme, sir? Under this Agnipath scheme, you can join Indian Army. You can join Indian Army and you should work for Indian Army for a period of 4 years. Now you work for Indian Army for a period of 4 years. So this was launched, Agnipath scheme. Agnipath scheme was launched by central government in the year 2022, wherein Indian youth were employed, enrolled to which under which, sir, Indian Armed Forces. So you can join your Indian Army. So what was happening? You should work for Indian Army for a period of 4 years. If you work for Indian Army for a period of 4 years, then whatever salary you are getting, no, 30% of that salary will go under this scheme, which fund. A fund will be created. What is that fund called as? Agniveer Corpus Fund. Okay, the government is going to create a fund called as Agniveer Corpus Fund. Whatever amount you are earning as a salary, 30% of that will be deposited in that fund. So if your salary is 1 lakh rupees, then 30,000 rupees of your salary will go to which fund? Agniveer Corpus Fund. Same amount, 30,000 rupees will be deposited in this fund by whom? The government also, central government will deposit. So every month 60,000 rupees will be put in this particular fund called as Agniveer Corpus Fund. Now, this amount, whatever is put in this fund, no, that is allowed as deduction under section 80 CCD. Sorry, 80 CCH. Whatever amount is put in this is allowed as deduction. Now, this amount will be allowed as deduction only if it is within the limit of 30%. Sir, what if it is more than 30%? Then up to 30% it is exempt. Extra amount which you are putting, that will be taxable. That is what this particular scheme is all about. It is just copy paste of what was there under 80 CCD. But a new scheme has been got. Government has got new scheme. 80 CCH, deduction in respect of contribution to Agnipath scheme. Agnipath scheme is a scheme launched by central government in the year 2022 for enrollment of Indian youth to Indian Armed Forces. What is Agniveer Corpus Fund? Agniveer Corpus Fund is a fund which in which consolidated contribution of all the Agniveers and a matching contribution by the central government along with interest will be held. It is a fund or a dabba wherein the Agniveer's contribution as well as central government's contribution will be held. Features of this scheme is each Agniveer will contribute 30% of his monthly customized Agniveer package to individual corpus fund account. Government will also contribute the same amount. The government will also pay an interest as approved by the government. Deduction, whatever contribution has been made is allowed as deduction under section 80 CCH. How much is the amount of deduction, sir? Amount of deduction is your contribution or 30% of your salary, whichever is less is the amount of deduction. Now please note, this is for assessee's contribution. Whatever government is contributing, for that also you can claim deduction. Same, how much ever contribution is made or 30%, whichever is less. This is all about Agnipath scheme. Now there is one section called as 80G. 80G talks about what, sir? Donation if you make, deduction if you make any donation. Now there was a criteria of 50%, whatever amount you are contributing, 50% of that will be allowed as deduction if you contribute the money to these funds. Now here they have removed this Jawaharlal Nehru, Indira Gandhi, Rajiv Gandhi Foundation or Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Fund and Rajiv Gandhi Foundation. So under 50% criteria, there is only one thing now, which is Prime Minister Drought Relief Fund. So if you make a contribution to Jawaharlal Nehru, Indira Gandhi, it is no more allowed as deduction. If you donate money to this fund also, it is no more allowed as deduction. So this is all about your amendments under income tax law. I hope you enjoyed learning this, and roughly these amendments were not too hi-fi amendments or something which you would have not understood. Major amendment is there only in your income tax law, which is 115 BAC. That is one of the important amendment. What I would have thought in the classroom under 115 BAC may be different. For example, I would have told 115 BAC standard deduction is not allowed, but now they have made an amendment telling yes, standard deduction is also allowed. Okay, I hope your studies are going great. I wish you all the best of luck for your examination. Clear your examination with flying colors. Let me meet you in my final classes. Till then, tata, bye bye, take care, enjoy.